Welcome to another edition of BCR Webcasting. Today I'm joined by Shona Tatchell, who's the Director of EBRD's Trade Facilitation Programme. Shona, welcome.
Hi.
Shona, so you've started in this role, about 6 or 8 months ago?
Yes, that's right, May this year.
May. So I wanted to give you a few months to get acclimatized, get your feet firmly planted under your desk before speaking to you. And so now that you've had a few months to do that, I was really keen to get your thoughts and views on how you see the Trade Facilitation Programme moving forward and shaping how you're going to be shaping that in terms of your factoring and supply chain finance activities. So just give me your views on how important you think factoring and supply chain finance is in terms of the development of those products in the regions of operation within EBRD.
Yeah, so the EBRD's purpose is to act as an enabler for trade finance and for our partners across the region. And supply chain finance we see as a really key product, particularly in the area of SME financing and allowing for and enabling access to finance by smaller companies who may be sometimes squeezed out of traditional bank lending structures because they're too small, they don't have collateral, they're perhaps a little more informal. Their financials perhaps are not necessarily easily understood, and these companies need to be able to survive because they are and do play a critical role in every value chain. So for them to be able to actually continue to thrive and to be sustained, supply chain finance is a really important tool that we see in the banking sector because it really allows for the creditworthiness, particularly in payables financing, it allows for the creditworthiness of the large buyers to be leveraged and allow for that cash flow and the sort of liquidity at lower cost, a more affordable rate to be provided to suppliers, which makes them less dependent on the formal, more traditional forms of bank loans, as I said, where there isn't necessarily collateral available to underpin those types of transactions. It's also a really important tool when it comes to, as I mentioned, sort of sustainability of value chain. Supply chain finance can actually be connected to incentive structures, which can in themselves develop or allow for the development of a more sustainable and more transparent value chain structure. So suppliers can be incentivized or encouraged to meet ESG standards of their buyers, for example, through the offering of differentiated interest rates dependent on supplier performance. And it can really drive through the requirements and the standards, particularly with all of the regulatory implementations that are happening across the EU and other developed markets. Being able to actually incentivize suppliers to meet and comply with those regulations is something which is fundamentally important to brands in order to meet their regulatory and reputational obligations. So supply chain finance allows for some of those tools to actually be built into the structure of the financing itself, which then allows for differentiated financing. And it really it's really a win-win. It benefits both the large anchor buyers, but it also benefits smaller suppliers because it lowers their cost. It makes their supply chains stickier, their relationships stickier, and it means that they have better market access. Supply chain failure is not something that any large corporate or bank that's financing it ever wants to happen. And we all saw during the time of COVID how the impact of supply chain sustainability on us, even as, you know, not just as financiers, but also as consumers, that the impact of potential supply chain failure, or, you know, logistics and transportation failures, you know, just meant that.
So they've got this kind of immediate need and very strong need to support SMEs with their working capital positions in these emerging markets, and also then there's the secondary effect, as you explained, of in terms of ESG requirements and regulations. And so your areas of operation are what, Central and Eastern Europe, Central Asia. You're thinking of moving up, or perhaps you are into Sub-Saharan Africa.
Yes.
Is there a sort of priority in terms of which regions you know need the support more strongly than others within that?
Yeah, so we're already active in terms of our supply chain finance, so our payables financing programs, and also our more traditional factoring programs. We're already quite active in some of our maybe sort of better developed economies. So we have supply chain financing facilities in place in countries like Greece and Poland and the Czech Republic and Romania and Estonia. But as we move sort of further out, it tends to switch over a little more to more traditional factoring facilities, where it's essentially what we're doing is we're providing liquidity through primarily bank-owned factoring companies. And those countries that we are offering that product in tend to be a little less developed. So, you know, some of the above, but we see great potential in countries such as Mongolia, Egypt, Morocco, Uzbekistan, which are very active economically, but where there isn't yet necessarily the sort of full depth of you know, integration really of these different types of structures to allow for a payables financing facility to be implemented. But we see great promise for the future, and you know, those are areas that we're absolutely going to be focusing on, because, as I say, they're economically very active.
So when markets are very, very new, then you tend to start with factoring, and then
yes,
and then perhaps later on, as things develop, move into supply chain finance.
Yeah, and supply chain finance, so in the sense of a payables financing structure, is quite a new product area for the EBRD. So it's only, our program is only a couple of years old actually, and was initially run for the first 2 years, was essentially a pilot product that has now proven its success and has been implemented as a full-blown product offering. So hence another reason why, you know, we're really just starting to sort of build our portfolio in that area. You know, I think we have six or eight deals that are currently in sort of programs that are currently very active, whereas factoring tends to be far better developed. And we even, you know, even countries like Georgia were actually offering local currency factoring facilities, which is very helpful, and is again is something that we're looking to try and extend into other countries as we you know, as just FX exposure is really starting to sort of impact on a lot of the smaller corporates in some of our countries, and they would rather take funding in local currency in order to be able to manage that FX risk.
But this is not an easy nut to crack in many jurisdictions, as you know. And you know, what are the kind of obstacles that need to be overcome to get these products developed and to get the banks to start offering these services?
Yeah, and actually this is the other area that the EBRD plays a really important role. So there's obviously, you know, where we're providing finance and liquidity and these structures on the product side, you know, that we play a critical role there. But we also about half of our time is spent actually putting together what we call technical cooperation and policy dialogue and policy reform. So we spend a lot of time putting together workshops, training, advisory and consulting, and that's really, really necessary, particularly in the area of factoring and supply chain financing, because market awareness, or it's very limited, particularly in the SME sector, and even in fact with some of the banks that we work with in our countries. It's a relatively new area that's quite unexplored. So we offer through our network of consultants, we actually fund a lot of workshops and training sessions so that we can really raise awareness and understanding of these tools that are available to SMEs.
But
That's a very
even before you get to that point, you've got to make sure that there's the legal structure.
Exactly.
Exactly. So where that isn't in place, how do you go about getting that done?
Yeah, so this is where we get engaged in policy reform, and we have a team called the Legal Transition Team who work with us to try and establish the right legal environment and the right frameworks in those countries. So whether that's in things like working to establish invoice registries, or ensuring that open account transactions get the right treatment, or even enabling more of a digital environment, so that there can be more digitalization in this sector, which obviously then sort of allows for scale, allows for a lot more liquidity in the market. So just getting all of those pieces, those sort of fundamental building blocks in place is really important, and that's that's part of the role that we play, is to ensure that happens, because that's I would say sort of beyond the remit perhaps of individual tech platforms or even banks on their own to actually engage in, and it's where the EBRD and other development banks play a really fundamental role.
Yeah, getting that infrastructure in place is, of course, is very often the starting point, isn't it?
Yes.
And from there you can start to build, and with education and training, which I know plays a very big part of what you do at EBRD, and I guess to some extent EBRD, in terms of getting to governments and central banks to get them to understand the benefits, the real benefits of these products. That's something that EBRD has those connections to begin with.
Exactly. Yes. No, we have the avenues to be able to directly identify the right people to speak to. We also have, again, through this capacity building and sort of technical assistance that we can provide, we are also able to do things like sort of build economic business cases to present to regulators, to show them why it's a good idea for them to actually engage in this type of activity. So we can bring all of that along, I would say the sort of the softer side, perhaps, away from the sort of the financing itself. So and even providing, I've got a good example in Ukraine at the moment, where we have a really excellent consultant who has huge supply chain finance experience, and an ex-banker who is actually working with our partner banks in Ukraine to help them develop a business around supply chain financing. So spending months working through engaging senior management all the way down through the sort of the front office operations, and putting in place frameworks to allow the banks to actually build a whole business around supply chain finance, factoring, open account, working capital financing.
Do you see factoring and supply chain finance, do you see that playing an increasingly more important role within the TFP in terms of your overall trade business that you do?
Yeah, well, so open account trade clearly accounts for something like 80% of global trade, and is increasing in terms of sort of volume and value of transactions. So for us, we see it as a very, very important area to develop. So within the TFP, we work with factoring companies themselves and financial institutions, so banks. We have colleagues who are in our SME team, our SME finance team, that actually have developed the supply chain finance product. But together, what we're looking at doing is trying to sort of implement let's say a sort of a joint structure whereby we can potentially look to address the different levels within different value chains. So some structures that sit between a tier one anchor, a tier one supplier and an anchor buyer, and then other structures where we can work with the banks to the tier 2, tier 3 and beyond, tier to tier N suppliers, where there's a requirement for local currency financing or liquidity intermediated through the banks. So actually, by putting all of those pieces together, we can end up potentially with an entire chain being financed from different angles.
Right.
That's certainly an area that we're exploring very actively with our colleagues.
Yeah. So primarily then, so the sort of things that EBRD can provide to regional banks to help them in this develop this sector is training, consultancy, and then guarantees and direct financial
and direct financing. Yes, exactly. We have these sort of unfunded products and funded products. So and then supply chain financing. It depends how wide you stretch the term, really. It can come down to the provision of simple, pre-export finance loans, manufacturing loans, purchase order financing, where we're actually providing either guarantees or liquidity to banks in our markets are on lending. So you sort of put it all together, and then you have the overall structure of financing for the supply chain.
Yeah, I guess. So we tend to use the term at BCR as the sort of reverse factoring. But I know it depends on who you talk to.
It depends on, exactly.
Have a much wider definition.
Yes.
Shona, thanks very much for your time today, and we are very much looking forward to following your progress in this sector. And how you're making a difference in your regions of operation in terms of helping banks to develop these products. It all sounds very exciting and very interesting. And I'm sure we'll be talking again in the not too distant future to see how you're getting on. But thank you very much for your time today. Thank you.
Thank you too, Michael.